Hi guys, in the last video we looked at a nice dip buy example on the Nasdaq in a strong trend. This example is different. It's within a choppy area of the market, but within these choppy areas there are strong moves and a lot of profit to be made. So with the framework I'm using, I need to identify a certain event. This event will tell me where directional dominance is. Sounds like a complex term, but effectively the market is either doing one or two things. One of those is directional dominance, that's what we're looking for, and the other I have called weak directional control, and it constantly flips between these. So all we need to do is find the event which is going to tell us that we're moving into directional dominance, and then we can profit from that. So as it says here, the cleanest setups often follow reversion to directional dominance. So for the most profitable trades, we want to find the moment where the market reverts back to directional dominance. This is the key detail here. Fast or deep impulsive moves and fast or deep whipsaws can define directional dominance. So that's what we're going to start with here. Right, I put this line on the chart and it's what we're going to work with here. So fast or deep impulsive moves and fast or deep whipsaws can define directional dominance. So this is quite a technical wording, but we can make it simple. So firstly, we've got fast moves in both directions, but in this area we've got two strong upside whipsaws. So this trend moves up here very strong, but then look at this candle here. Yeah, that's a big bearish candle body, and so this area becomes a whipsaw. It's a whipsaw with a strong downward move, and then we have little candles moving up. Little candles is not a show of strength, and when we have more big downside candles. So what this whipsaw is telling us is that this was a strong move, but it became exhausted, and then this drifts sideways, and later on we get another very fast whipsaw here. This upside wick means that within this time frame there is a quick up and down through this candle. So this type of upper wick candle is very useful to us. And notice that through all of this area, including this top here, this is the largest wick in the whole area. And so we go back to the line, fast whipsaws can define directional dominance. This isn't a deep whipsaw, but it is fast. And this candle is a known bearish candle. It's a known reversal candle, and it's called a shooting star. Yeah, here's a little image here to show you. Often appears at tops. So this candle is increasing the chances of downside action. Now, having done that work, we can now look at our Bressert indicator and see that it is signaling potential exhaustion here. And so if I use bar replay here, this is what it would have looked like if I was trading this setup live. And once that candle's closed, this is where I can enter a setup. Before I do, I'm just going to get up another line here from the guidance. A confirming wick whipsaw before or after a Bressert marker can add weight to the setup, either for entry or continuation. So this rule I used in the previous video as well. It's very useful. The confirming wick here is a shooting star that I just mentioned. It's a very fast whipsaw, and this is a big clue that the trend is about to collapse. And then if I press play here and increase the speed, we can see that then it does capitulate down and down and down. This is a very deep move, and this marker would have allowed a trade entry right at the start of a move. Right, so now I'm going to show you how to make the trade setup. So into the trade platform, I need to select the same chart. Right, so to do this, I want to isolate the candle where the cross marker triggers. And so it's this candle here at 8 o'clock. But on the trade platform, we need to do this in the 1 hour chart, because it doesn't have a 2 hour chart. So this is very simple to do. We just use this tool here, and I've already got this set up to the time. Yeah, notice it's 9 o'clock, 13th of May 26. And then now if I select the 1 hour chart, and then I come back to this tool and go to that time, then it just brings me back here. And so this candle close is where the marker printed. The marker printed at 8 o'clock on a 2 hour chart. Yeah, so it closes at 10. And so I'll just use this 9 o'clock candle here. Now, again, I've got this already written in to save time, yeah. Same date, same time. And now zoom in here, come on to full screen. Yeah, and there's that 9 o'clock candle there. Right, so this trade is a short setup, and that means we're making profit if price goes down, so our stop loss area will be to the upside. So I'll come in here, select short position, select magnet, and that will snap the cursor to the extremities of the candle body and the wicks if I prefer. But here, where the candle body stops, that's where the candle closes, so I attach that here. Now for the stop area, same as the previous video, we've got a big wick here which defines the high of the area, and so I first want to attach the stop area to that wick. So all I do is I hold this toggle with the left mouse button and drag across to the wick. So the stop level is now the same as the wick extremity. To increase the chance of the trade being successful, a conservative approach is to move this stop loss back a little. And as I covered in the previous video, I use ATR, average true range. So I come in here, technical indicator, ATR, average true range, click that. Now this tool is going to help me move the stop level away from the wick. Yeah, so if I hover the cursor where this candle is, notice that on the right it says 0.00096. Yeah, here, 0.00096. And so because this is a short and we want to move the stop level up away from the wick, we need to take the price of the stop level and add the ATR. So we're going to need a calculator for this to avoid the maths, and come down here, a copy of the stop level, get the calculator, paste this in, and then hover in line with the candle 0.00096 plus 0.00096. And so this is the price point that I'll use for the stop level. So I'll come back into the short tool, paste that in there, and then as I press OK, notice that it moves the stop level back away from this wick. It just gives it a little bit of breathing room away from this wick. Alright, so similar to the last trade setup that I showed, this area has 3 obvious options. I come back into the chart software so we can go up to the 2-hour chart again. So this is a very strong whipsaw here after this fairly strong whipsaw here. So this is signaling that this can have significant downside. So as I look back on the 2-hour chart here, you can see that there are 2 levels here that price can be attracted back to. Remember that price is attracted back to significant pivots. So this is one significant pivot here. Yeah, so we've got one significant pivot after bearish action here, and another significant pivot here after bearish action. And so these can be target points for us to take profit. But firstly, I'm going to show you the one-to-one setup here. So this is risk 1 to make 1. Yeah, risk 100 to make 100. This is a very useful conservative ratio, because if a trade doesn't do quite what you expect, then you can come away with some profit. And so to do this, I simply take the number of ticks from a stop level, copy that into the profit level, and as I press OK, notice that this green area is going to increase down, and this ratio changes from this number to 1. And this is a nice conservative approach. Lock in some profit quickly. And then for the next trade option, there are 2 supports here that we can target. So if I zoom out here, you can see those 2 pivots, even though this is on the hour chart. Here and here. To set that up, I just hover the mouse over here and pull this toggle to this low here. And notice now it has a risk to reward ratio of 2 to 1. And now if I pull this again across down to this lower low, then risk to reward 2.47. Now this trend didn't stop there, it went down and down. And so we will look at what is possible in this trade with this defined stop here. If I pull this toggle down all the way to the low, then 5.96, effectively 6 to 1 risk to reward ratio, risk 1 to make 6. Now for our technical work, we need to find a pivot where we can take profit. And if I zoom across here, notice that there was a pivot back here. And it was in this area that the market did actually bounce. And so now if I move a toggle across and attach to this low, we can see that that would be a 5.23 risk to reward ratio. Right, so let's work through that now in the trade section. So firstly, I'll make this a 1-to-1 again. Just copy the ticks across. Now, this is a trade example. If this was live, I would just use market here. This gets me into trade immediately. But so we can do our example work back at this point, I need to use limit and set the limit to the entry price. In a live setting, you don't need to do this. So copy that in there. Now come down to profit level, paste that into the take profit box. Then copy the stop level and paste that into the stop loss box. I'll show this example as a 1% trade. And so this is a £25,000 account, so 1% is £250. And so to make a 1% trade, I want to risk £250. And so I need to increase this volume here. Yeah, so watch the P&L move up as I increase. So that'll do, 251. Now if I click on the take profit box, notice that it also says 251. Risk 1 to make 1. Risk 251 to make 251. So that would be the first option to take profit. But then, as with many reversion trades, there are these supports that we can target here. Yeah, so if I just snap that one to the first support, 2-to-1, risk to reward ratio, come in here, take the profit level. Yeah, so if I was to trade this back to the first support, it would change the profit from 251 to 528. Yeah, because this is a 2-to-1. So now risk 1 to make 2.1, risk 251 to make 528. Yeah, and now same thing again, I could also target this next low. Yeah, so snap that to that low. This is a 2.47. Again, come in here, take the profit price and paste that into here. Notice again, 528, paste it in, 621. So for this trade option, it's risk 251 to make 621, because this is a 1 to 2.47 trade. And now let's look at the home run trade. Let's say you let it run all the way back to this support down here, and that would be a 5.09 risk to reward ratio. Again, just come in here, copy the profit into the profit box. Notice here it's 621 from this support, but if we'd held all the way down to this low here, yeah, if I paste that in there, notice that it changes from 621 to 1,281. Yeah, so risk 251 to make 1,281. And there is the power of letting trades run in the right areas. Through this series, I'm going to be showing more setups using my ThinkFast Bressert guidance and using my adapted Bressert tool. Both of these are free to use, and links for everything I've covered in the video are in the description. Right, so that is the end of the video. I'll see you on the next one.